Hi, this is Ishfaq Khan. So in this video we are going to learn prepaid rent with VAT, and what if rent is paid with the post-dated checks, how much will be the rent expense, how we are going to allocate the rent, and how it will be presented at the end of each financial year. What amount will be reported in the balance sheet and what will be the amount that will be reported in P&L. And all this will base on our practical scenario, in which this is the tax invoice that I have received from real estate corporation, and we will base this as our example to understand. Let's start from a very simple scenario and then we will proceed with different other scenarios one by one. So this is a very straightforward, in which you have paid 12,000 rent on 1st of January 2023. So what entry you will make? You will debit prepaid rent and credit bank account on January 1, 2023. Now if you want to charge rent monthly, what you are going to do is that every month you will make debit rent expense with 1000 and credit prepaid rent each month till 12 months are finished. Or if you want to make only one entry at the end of the year, what entry you are going to make is rent expense for the full year debit and prepaid rent credit. Alright, so this was a simple scenario. Now let's see in our example, in which the dates are different. We have VAT amount and our rent invoice date is different from our financial year ending date. So we received this invoice on 15th of March 2023. This is for 1 year, from 15th of March 2023 to 14th of March 2024. So at the time of contract or at the time of invoice, we will make this entry. We will debit prepaid rent without VAT amount. Okay. Credit, you will credit VAT input, VAT control account or VAT refund account, whichever account you are using. I have a separate video on how to make journal entries for VAT. You can see that as well for your more concept clearance. However, here we will debit prepaid rent, then we will debit our VAT input account, VAT control account or VAT refund account, whichever account you are using, with 24,105, and amount that is payable to real estate company is 506,209. So this is the entry that we have booked when we received the invoice. Now when you will actually make the payment, you will debit real estate company, you will debit your payable to real estate company debit and bank account credit. So what effectively you have done, you have cleared this payable. So prepaid rent debit, VAT refund or VAT control account debit and bank account credit. This has been effectively done. These two are debited and bank is credited. So you have created a payable and removed. Now how you will make the journal entries each month and how much amount will be presented in the profit and loss account at the end of the year and how much amount that will be presented in the balance sheet. So now at the end of the first month, you will make entry rent expense debit and prepaid rent credit. So in the first month you will allocate for 15 days only. So what you did, because you have paid the rent from 15th of March till 31st of March you have 15 days rent expense debit, prepaid rent credit. And similarly for the next month you will make journal entry. So next month your entry would be total rent amount without VAT, because the VAT amount will be adjusted separately in the VAT control account or VAT refund account or VAT input account, whichever account you are choosing. In the next month, at the end of the April, you will make this entry. So for the month of April, you will charge rent for 30 days. Total rent divided by 365 into 30. So this will be the entry that you will do for the month of April, because in the month of April you consumed the rent for 30 days. So what effectively you are doing is that you are shifting prepaid rent to rent expense. So you are shifting this amount to this amount. So if you have two jar, one jar is for prepaid rent, other is for rent expense, you are shifting this amount to this slowly and gradually until this is finished. Suppose the year is finished, our financial year is 31st December 2023. So till 31st of December 2023 you have consumed the rent for 291 days. So what you are going to do is that your total rent amount without VAT, which is without your total rent amount without VAT, this amount divided by 365 multiplied by number of days consumed. So debit rent expense with this amount and credit prepaid rent with this amount. You see over here in this prepaid rent jar, the amount is being shifted from prepaid rent to rent expense. So how much amount will remain in this jar would be, or how much amount that would remain in your prepaid rent account would be this minus whatever the amount you have already consumed, which is 340, 362. So this is the amount that you have already consumed from prepaid rent and has been shifted to rent expense. This is the total amount. Okay, these were just entries for the sake of understanding monthly entries. Now this is the cumulative figure. So this is the amount that has already been shifted to rent expense from prepaid rent. So the prepaid rent, remaining prepaid rent as at 31st of December 2023 would be 97,742. So in the balance sheet you will have prepaid rent expense as 97,472, and in the rent expense you will have 384,362. Just for the sake of understanding, suppose you have not claimed your VAT refund and you don't have any other VAT amount or account, this 24,000 would be your VAT refund. It can be shown as a negative liability or in your asset account as refund. All right. Now this was the scenario in which post-dated checks were not involved. Now let's see what if post-dated checks are also involved in these scenarios. The other entries will remain same. The first entry would be same as at 31st, as at 15th of March 2023. We will make entry as prepaid rent debit, VAT control account debit, and we will book a payable on the when we will receive the invoice. Now at the time of making payment, so these will be the entry that you will make on once you will receive the invoice, and you will just book a payable on that date. Now how you are going to pay? You are going to pay by post dated check. So debit payable to real estate company and credit PDC payable to real estate company. Please keep in mind, we are not releasing or relieving one payable with the other. We are just changing one account for the sake of internal control. So payable to real estate company is just being replaced with payable to real estate company with PDC. So you can do like this. So now how much PDCs you have issued? Suppose you have issued the 4 PDCs or 3, suppose you have issued the 3 PDCs. At the on the date of each PDC, these entries will be done: PDC payable debit, bank credit, PDC payable debit, bank credit, PDC payable debit, bank credit. So this PDC payable will affect your bank account and your payable account. The effective entries are being done is the same as in the previous example: payable to real estate company debit and bank account credit. So this is just our intermediary account. Now the other entries would remain same. If you see over here, 15 days rent, then same as in the previous, then you will consume the 1 month rent, and other entries would remain same as we discussed. Only the intermediary account, PDC payable account, will be introduced. In the same way, if you understand with the concept of this jar, now we will have PDC payable account, and that PDC payable account is being converted into payable account. And here the same concept that we have learned in the previous example, prepaid rent, is being converted into rent expense, and VAT account will remain the same as we discussed in the previous example. So that's it. I hope you like this video. Please click the subscribe button for me, share it with your friends if this has helped you. This might help your friends as well, and give me some motivating and uplifting comments so I can release more videos of these kinds. Thank you very much. Take care. Stay blessed.